Hi everybody, thanks for tuning back into Crypto Mainly. My name's Lee. Thank you very much everybody for liking and subscribing and pressing the bell. You'll notice I've got 246 subscribers. Please don't let that put you off, guys. The channel's only been going for just over a month now. I've been in the crypto space for many years, and I've been working with some of the most, if not the most, recognised influencers in the crypto space. And now obviously sort of branching out to do my own YouTube channel. So this is all very new, guys, so please don't be put off by the number of subscribers. Please like, subscribe, give me a chance to watch a couple of my videos, see what you think. Hopefully I'll provide some value and you'll find them interesting. Just to mention, guys, my NFTs are still for sale over on Opensea and also on Rarible. Links to that are in the description below. And you will note, obviously, what the prices in the market coming down, that it's quite good value to pick up one of those NFTs at the moment at the current prices. I am on Twitter. This is my handle @CryptoMainly, and please do follow me over there. And I will be providing regular updates with some charts and things, chart setups and what have you, moving forward. So thanks ever so much, guys, and let's jump straight into the content. Okay, guys, lots of doom and gloom in the market at the moment, and understandably so. I mean, if you look at the way that the market has taken such a sudden dip, and also the altcoins being hit so hard, I just wanted to give my opinion on where I think we are at the moment. People are talking about this capitulation candle and things, and that's coming. Personally speaking, I don't think that we're going to see that at this point in time. I think we're going to see it later in the year. As I've said on the last couple of videos, but I'm just going to try and put together as much hopium as I can find. And if things are looking doom and gloom, please take what I'm saying with a pinch of salt. But I just want to share my perspective and where I think we are and what we've got to look forward to in the coming days and weeks. So this is obviously the Bitcoin chart. This is the only one really that I'm focusing my attention on at the moment. I do think that we will stay within this range of this triangle. With some wicks down, just to worry people, the same as this one here. You'll note that I've marked that blue price there, which is 26,591. So let's say 26,600. And that's the wick low that we've already seen. It's my opinion that we won't see prices very much come below that low. I think we'll look back in time. We'll see that maybe we'll get one spike below, but I think this is the range low, if not, sort of very close to, if not the range low. So if we do get another spike down, obviously that will create a new low. But I do think that this sort of 26.6 mark is going to be very close to the bottom. So there's lots of things that suggest that there is some further downside. But as I say, guys, this is my opinion. Please take it with a pinch of salt. But I do think that people are getting shaken out of the market at the wrong time. So if we look at the first peak to the low, we're looking at sort of 55% correction. And if we look at the peak for 69k to the low where we are now, it's actually closer to a 60% correction. We have already made a considerable correction in the market. And if you look at the total market cap, this is the total of all the complete market cap added together. So all of the Bitcoin, Ethereum, and the altcoins all added together in one. You will see that we've not yet this particular line here. So the candle body close here is the dotted line here, which is the 1.199. So let's say 1.2 trillion, just for round numbers. 1.2 trillion is the candle body low. From the lows of July 2021, when obviously Bitcoin price was down here at the low 29s. And you can see from the total market cap that we did have a big spike down, and we have had a considerable bounce. So there is still some considerable support in these low areas. I mean, if we do start to lose these lows, the lowest point on there is 1.137 trillion, which is the red dotted line at the bottom. You saw that we had a spike into it, but an immediate recovery and bounce. I mean, if we do start to see us, getting any kind of daily closes below that 1.137 trillion, then we can basically hang our heels up and just wait until the next cycle, basically, because there will be a multi-month bear market that will hit us if we start to close below that. But I just don't think that that's going to happen, guys. So I mean, if you just watch for that, 1.137 trillion is the absolute low on a daily time frame on the total market cap. Please watch out for that, guys. That's the point of invalidation. But as far as I can see, as I'll show you, there's a number of things. I mean, if we were to cast our mind back to July 2021 when we were in this area here, nothing was looking bullish. Sorry, on Bitcoin chart. Should be looking at the Bitcoin chart. So when we were here, rather, nothing was looking bullish. We were creating new lows day on day. We were breaking daily lows, and in fact weekly lows. We broke the weekly levels as well, which we've spoken about the Wyckoff. I'll just bring the Wyckoff chart up for you now. Okay, so we've been looking at the Wyckoff chart for a while now, guys. We've got this dip, this long wick now at the bottom of this range. We've bounced immediately back up to above this low here, we're trying to find support back above the 30,000 mark now, which is great, and that does look promising. If we get long wicks like that, you do tend to. What I think we'll do is we may get another retest down actually before we do see a lift off. Looking at the size of this wick, much the same as back here. So you see we've got these long wicks, and then you get some retries of the lows. I do think we will see another test down at the lows there. So it wouldn't surprise me at all to see that before we actually get the lift off. So going back to this chart, guys, that would translate to sort of spike lows coming down here, and as you can see, as I said before, 26,600 is the level, the blue dotted line there, and the price in blue there. So that would be certainly a level to watch. If we start to break down below this lower support and this 26,500 level, and we start to get candle body closes on the daily below that level, then I really do think that it's time to take a break for a while and perhaps come back when things are looking more rosy, because that will lead to a multi-month bear market. But we're at the wrong part of the cycle, I think, which I said in my video yesterday. I did quite a lot of analysis in terms of the mid and longer term range. So please do check that out, guys. I'll put a link to that in the video on the video card at the end of this video. Okay, so do take a look at that video from yesterday, guys. Okay, so just a couple of areas of interest really on the way up. I mean, over the course of trading over the last few years, you do get to a point where you have to, no matter how unlikely it appears, you have to trade what you see on the charts. And what I mean by that is this broadening wedge is a valid pattern, and the target from this breakout. So the breakout of the first falling wedge, the blue triangle here, would be the top of the range, which is at 47,800. But the bigger range, if you like, the breakout of this falling wedge, the bigger target would be back up to the all-time highs, and that is what this falling wedge is suggesting. So I have learned over the years to just trade what you see on the charts, and that's what this is suggesting, is that we will see the highs again of this range. But there's a long way to go. There's some things I want to show you on the way up, some things that we'll need to be watching out for. So I'll just show you those as we go along. So there is a point of interest here at the 382 at around the sort of 43,000 level here. And the reason I say that is if we go into a weekly time frame and I add the bull market support band on, you'll see that the bull market support band is coming down. It's heavily sort of angled to the downside here, but as provided we get the bounces and things from the 30,000 level, we will see this start to level off at around about the sort of, you can see here from the two measures there that the bull market support band is between 40,000 and 41,000 for round numbers sake. And you can see that that this will start to flatten off if we start to get the prices rising here. If we look at the so that's the bull market support band and those levels there. So between 41 and 42,000. If we take the bull market support band off, go to the daily time frame, and add a 200 moving average onto the chart, that's the orange line here. and as you can see, that's at 45,600. But again, you can see that this is that, you know, heavily angled to the downside. Sorry, that's not drawn very well. It's so you can see it's heavily angled to the downside. So if we sort of, you know, if we just extrapolate that that movement, you'll see that it is looking like, you know, it's coming to this same sort of area here, which is the bull market support band and the 382 the bounce level. So you know, there's going to be a considerable area there to consider and to watch for, to see what happens with the price. So between 40,000 and 43,000 basically is the level to watch there. And we're going to have to watch very carefully and see what happens to see whether we're going to get the breakouts. I wouldn't be surprised if we see, you know, the price actually break above the bull market support band. So let's just go back to the weekly, put the bull market support band back on. You can see, you know, it's in the mid range here. So I wouldn't at all be surprised if we see something like this, where the price breaks out of this wedge pattern. You know, the bull market support band will come across and likely be in this area here that I've marked off. But I wouldn't be at all surprised if we see the price break out, even get above the bull market support band, bounce along a few times, and everybody start thinking, yeah, you know, we've got the bull market support band as holding as support, and then we go up, and then we reach go back to the daily. I'll add the if I had the 200 moving average back on. So yep, we put the 200 moving day average. You know, you can see that it's starting to come down, and as I say, you know, it's looking like, you know, if we get the bounce actions, that we're going to see this sort of start to level off, and I could see us maybe even just poking above the 200 moving day average, and then getting the rejection, and then creating the new lows that everybody's looking for between the sort of the 22,000 level and the 24,000 level, sort of later in the year. And it's interesting that, you know, that if we look at the sort of September time, you know, that's when, you know, this descending support line actually would coincide with us having a retest of, you know, that area down there at the you know, between 22 and 24, which is what I've been saying for a while now, which is where I think we'll end up, between 22 and 24, as being, you know, sort of like the sort of the final lows, if you like. And then obviously after November, then we'll start to see the run up to the halving, which is currently scheduled for sort of May 2024. So I think if we see something like this over the next couple of months, and then the tailing off towards the back end of the year, that would make sense with being in a line with where we are in the market cycle. That would make more sense to me. Okay, so moving on to Ethereum. We've got you know, we've got bullish divergence here now. I think we will see a retest of the lows. I think we'll reject from, you know, from this range low at 2160, so the wick low here. I could see us rejecting from there, coming back down to retest the lows again of this range before we get the move up into the summer, which would be, you know, I can see Ethereum being back up to the 3,000 level in the summer. Ethereum Bitcoin pairing. Excuse my scribble, guys, but we did say that we would see, you know, this type of bottom pattern where we'd get lows here and higher lows there. You will note actually that I've drawn on this extra support line, which is the dotted line, which I've noticed, which I added today. But you can see that as long as we're getting the bounces from those levels, you can see that this is actually, you know, quite a nice pattern. You've got lows, higher lows, and we're looking like we're bouncing off. And I think that we'll see, you know, something along the lines of, let me just draw this again for you, but just to make it a little bit clearer. But we've got, okay, so I think what we'll end up with is, you know, this sort of scenario where we've got, you know, this type of action. So you've got lows here, higher lows here,
and then obviously you've got a neckline of the W. When we break out, we'll probably come back up, come down, maybe retest this area of resistance here as support, and then off to the races. So if this happens, as long as we don't break down below this red dotted line here that I've marked in red there, which is 0.064465, as long as we don't break down below there and start to see candle body closes below there, and we stay inside this this pattern, then we've got to consider that this is a rising wedge, which is a bearish pattern, and there's a 68% chance that it does break to the downside. So we do need to be keeping a close eye on this. But for us to have any hope of an alt season, we need to see we need to see Ethereum bouncing from this bullish divergence from these lows, and we need to see the Ethereum sort of outperforming Bitcoin to be able to sort of have any sort of hope of any alt season there. So I mean, it feels like there's been big changes in the market, and you can see that this move here was huge, and it's no wonder that we're feeling like we are. But actually, when you start to look at the bigger charts, the total chart, this is kind of like the chart, if you like, to gauge whether we're going to be seeing an alt season or not, coupled with the dominance. But the things are actually, they're not disastrous. We haven't actually broken support and things on this level yet. Not to say that we won't, of course, but at the moment we're talking about the positive things. So I mean, this is not what we want to see. Obviously, we didn't want to see dominance breaking through this support. But what you will notice, guys, is from the high to the low here, that the price is actually in the golden pocket at the moment. So as an impulsive move, there's every chance that we may see a big rejection from this area, and it's looking like there is a rejection happening. So what we want to see ideally, I mean, it's looking like we'll get the retest of the breakout, but what we want to see ideally is for these support levels here to break down. So if we come back down, we want to really see that this area of support here, it breaks down, so that instead of we getting the bounce here, is that we get this collapsing downwards, in a downward motion here. So if we get that happen, then the alt season is back on, and it's not completely out of the question. I mean, we've got so obviously the situation with Luna and things, which has created an unusual market dynamic, which is maybe what's given it the dominance, the strength to burst back through. And obviously, if we look at Tether dominance as well, we are getting rejections. We did break through the resistance, and we are getting rejections back down. I mean, ideally, what we'd want to see here is if we can get something like this, where we get a series of highs at the top there, price action comes up, creates some lower highs here, and then we get the strength to actually come back down and break through that support there. If we break down through the support, then we're back in the realms of watching for this type of thing, where we've got this huge a huge move coming, which would be fantastic for the whole market. Not just the altcoins, but Bitcoin, Ethereum, and the alts. So that's what we want to see, really, guys. Is we want to see this support breaking, and the dominance, Tether dominance, breaking down, as well as support fading here. So I mean, I am stretching out the Hopium. I am aware of that, guys. But I just it wouldn't be completely unheard of, because there's been such unusual market dynamic. Is that when that settles down and we get the reversal, is that that we get these supports and things breaking and failing, and like the market continuing like in an organic way, which is what it was doing before we got the Luna situation. So this was looking like this was going to be rejecting. Dominance was looking like it was going to be rejecting, and then we had that series of sort of events with UST and Luna, and obviously it's changed the market structure from a charting perspective. But I wonder what will happen when things calm back down, and when some sort of confidence returns to the market, everything starts to settle down again. I do wonder whether those those resistances which have been broken, when we retest them as support, whether they will actually fail, and then we'll see actually a continuation of the market as it was supposed to have happened, had we not had the Luna situation. I mean, for me, this is the mother of all charts. This is the total chart. You can see that as long as we're not breaking, we've got a candle body low there, which is at 1.199, so say 1.2 trillion is that dotted line there. That's the candle body low from the summer of last year, so July 2021, which coincides with the prices when we were here. We all know what happened after that. Let's hope that we have the same sort of thing again, a fractal like that, which happens, and and we sort of continue onwards and upwards. I mean, what would be nice to see is if as if we all get surprised, which crypto does tend to do, is that we see actually we do get to the top of this range. So we get the breakouts from this wedge pattern. We bounce along. We actually do find support. We break out above the 200 moving average like we did here. We come back down and we find support. I mean, we actually failed the 200-day moving average on this occasion, but still managed to find enough spirit to sort of bounce back up. Maybe we'll see something like that where we come back up, get above the 200 moving average, come back down, find support at the 200 moving average, and then we end up back at the top of the range there. Now, I know that it's less likely that happens. It's less likely, but it's not impossible. It doesn't mean that it certainly doesn't mean that it absolutely most 100% definitely will not happen. Because as I say, if you look at this wedge pattern, the measured move is the top of this range, which is back to the all-time highs. So it could be that we see, the next few months where the price action just continues to go up, and then we still get the highs. We maybe even create a new high here, and then we get the sell-off towards the end of the year, because we're still looking at sort of towards the end of the year of seeing these new lows. It may be that we get this type of action. We've had a 50% correction followed by a 60% correction. Possibly we get up here and have a deeper correction into the back end of the year, which nobody's expecting either, and then we get the continuation on the run up to the 2024 halving. So yeah, I know I'm sort of I'm stretching my imagination a little bit here, guys, but there's a lot of doom and gloom. So I was hoping I'd be able to just put a little bit of positivity back into the market for you. So please take what I've said with a pinch of salt. There's lots of things which do look like things are changing for the worse, but there are some signs of hope as well, as I'm sure you'll agree with some of the content that I've shown you today. So hopefully none of you have been stung too badly. I sincerely hope that none of you are in a dreadful situation off the back of what's happened in the last few days. And thank you very much for liking, subscribing, and listening, turning on the bell and things. And appreciate you all for taking the time to do that. And I look forward to speaking to you tomorrow. Always remember, guys, take profits and buy something real. And thank you very much. I'll speak to you again tomorrow. All the best. Thank you.